February 1979, the Iranian Revolution. Oil production collapsed overnight. The supply disruption lasted 11 months. The inflation it created lasted 4 more years. This is the mechanism nobody explains. When Iranian oil production collapsed in 1979, oil prices doubled from $14 to $35 per barrel in approximately 12 months. U.S. inflation climbed from 9% to 13% by year-end. The supply disruption ended in early 1980. Iranian production began recovering. Prices eased somewhat, but inflation did not fall with the oil price. In 1981, 2 years after the oil shock, U.S. inflation was still above 10%. In 1982, 3 years after, still above 6%. It took Paul Volcker's 20% interest rates and 2 separate recessions to bring inflation back to 3% by 1983. Here is the paradox that economic historians document about inflation embedding. Oil prices cause initial inflation directly, transportation, heating, manufacturing inputs. But oil prices also cause secondary inflation. Workers see higher prices and demand higher wages. Companies grant higher wages and raise prices to cover them. The second round of price increases has nothing to do with oil. It is driven entirely by wage price dynamics. Once this second round begins, oil prices can fall and inflation continues. Because the wage contracts have been signed, the price expectations have been set. The inflation is no longer about oil. It is about the memory of oil prices. Atlanta Fed Wage Tracker in March 2026, wage growth at 4.1%. The threshold economists watch for embedding, 4%. We are above it. Oil is at $141, week 5 of the war. The 1979 disruption lasted 11 months. Its inflation lasted 4 years beyond that. We are in week 5. The embedding has not happened yet, or it is beginning. The distinction between not yet and beginning is visible in the wage data. The Atlanta Fed Wage Tracker is the indicator to watch. If inflation can persist 4 years after the oil supply recovers because it has embedded itself in wage expectations, at what point does the cure for the original cause become irrelevant to the problem that remains?